So I'm sitting here with Bud White, out of New York. Name of the company is Tacen?
Tacen, T-A-C-E-N.
T-A-C-E-N. We're in Miami, Dcentral. It's beautiful. Tremendous amount of people.
It's
and
incredible.
here we're with Bud. So the way we started this conversation for everybody to hear is like, hey, what did you find fascinating about Linqto as a company?
Well, like I was mentioning off camera, I've always loved the idea of being able to sell private equity. I've always worked for small companies, taking a lot more equity than paycheck, and it's tough to cash in that reward when you're maybe 3, 4, 5, 7, 10 years down the line and there's not a liquidity event. So I've closely followed a lot of companies that you guys are competing against, one of which NASDAQ purchased, and I always thought they were going to launch this public-private market hybrid, right? Or at least do tokenization of private equity in crypto, because NASDAQ also was doing some crypto stuff. But when they purchased that company, it just took a player out of the market. And I'm thinking about all the guys like me that are holding private equity that don't have these liquid markets, or at least even price discovery. Price discovery on a private market, it exists, right? When you're taking a bunch of OTC trades, you kind of know where that order book is, but it's never published, right? And I always think, coming from a position of sacrificing salary, right? You kind of want to know this and want to be able to liquidate some or all of your assets. So when I found you guys and learned that this is what you do, I was like, this I'm about I'm about what you guys are supporting.
But thank you, viewers. This is the end of the podcast. We don't have to find out anything about that.
Two thumbs up.
Two thumbs up. Yeah. Well done. That's amazing. But you've described what we do absolutely. Earlier on, you mentioned a couple of our competitors, Ford, Shares Post, etc.
Yeah, Shares Post.
So I'll just tell you the main difference between what they do and what we do and how we do it. They're actually brokers, so you can buy private equities from these companies, and you have to go through a whole process, and your minimum levels are whatever they set to be a minimum level. What we do at Linqto is slightly different, actually entirely different, is we actually, everything that you see on our platform, we're already investors in. We've gone through the process of going through ROFR. We own the equity. So you as an investor, an accredited investor on our platform, spends less than 2 minutes on pointing, it's on the app store, so go point at a particular asset, research it, and buy it, and you can do that in less than 2 minutes. You can choose over the 20-25 investments we have on our platform, and you can buy it in less than 2 minutes if you know you've done your research. And actually, if you have an Uphold wallet, the transaction time is 0.
Really?
Yeah. So it's really cool.
So let me ask you this: you guys have an asset cost, right? You get into a position, you're ideally reselling it for some or more, right? Are you taking the demand that you get on your platform and rebasing the price based on all of the bids and asks that you're getting within your allocation? Because you're essentially becoming one of the better signals for valuation of a company at that point.
So you've hit on a bunch of key points. So yes, price discovery is very important. And what we are seeing is some companies will come to us and says, hey, and we'll go to them and says, hey, if you're going to raise more money, or if you're looking for a liquidity event and you want to know what the market thinks about what your valuation should be, you should be putting some of the stuff on our platform.
Oh.
Because then you get a reflection from investors who are very aligned to a public equity market investor.
Right.
Right? So price fluctuates according, when we acquire shares, we're acquiring it on the secondary market or secondary shares. And depending on the price that we acquire them for, and then we mark it up, is what you'll see on the platform. So it's run by a series. So maybe a year ago for us to acquire a particular company was a little bit more expensive because of the valuation that people were getting. Today, much, much less, 30 to 40%, depending on the company. And so when we acquire those shares for less, the eventual investor pays less because we haven't, we've programmed that into our pricing.
Nice.
It's pretty cool.
Yeah. So is this? I'm thinking like the whole IPO process. The underwriters have to do all of their own research, right, on what they think the market can bear. Do you have a model where you're working with all of the underwriters where they would like put a small part, like you were mentioning before, a small part of the private to test price sensitivity before they go around and try to sell shares prior to like all the hedge funds and eventually?
So when you're looking at private at that level, how late in the game are they, right? So are they close to liquidity event?
Let's say they are. Let's say they're a year out and they're starting to have like the conversation with like JP Morgan, right? And they're like,
so I think what happens in that case is when we started out in 2019, we were doing unicorn companies, so we bought companies that were in the $1 billion range valuation. And by the time they got to IPO, it was like 6 months later, or 7 months later, and we had 6 exits. And the pop-up in value was good, and some of our investors, got a return that was reasonable. Others didn't, just because where it settled out. So we are starting to look at growth companies with a much lower valuation, so that the ride up for the investors is much more significant than getting too close to the IPO or M&A, because by that time we've got a lot of baked-in valuation already. So you have to balance between where you buy and what the liquidity is.
If you're doing that, then why wouldn't you come in as a minor investor in like a Series A or Series B?
We are starting to do that a little bit more.
Okay.
So companies that are growing, that we believe are in the right category, with the right management team, we'll start doing a few of those placements. Yeah. Good questions. Hey, is this your podcast?
I'm raising money right now, so I know all the questions.
Let's go to you, but
Sure.
tell a little bit more about who you are, what you do, and why you do what you do.
Yeah, for sure. So I'm the Chief Product Officer at Tacen, co-founder as well. Tacen, well, actually, I'll tell you my background first.
Yeah.
So we're at a crypto conference, and this always shocks people. I've been in crypto since 2009. 2009. I worked at BlackBerry. We were using Encryption.
2009.
Yeah,
BlackBerry.
2009.
Okay.
Yeah. But what people don't understand is, remember, did you ever own a BlackBerry?
Yeah,
Okay.
I did. Actually, I did.
So you remember BlackBerry Messenger,
Yeah,
right?
yep.
And everyone said it's encrypted end to end,
Yep.
right? Okay, well, how do you do that? You do it with an asymmetric key pair, right? A private public key, and you broadcast it, right? We send each other our private or our public keys, and then we can use that to encrypt data back and forth and decrypt it on our sides. You know what that is? That technology is just a crypto wallet, right? Think about like how a crypto wallet works, and when I tell people, like people are all like, "Oh, crypto's so hard to understand, right? It's like it's this crazy new financial technology," and I'm like, "Well, you remember BBM?" They're like, "Yeah." I go, "It's the same thing. I'm sending you money instead of texts." They're like, "Oh, I get it now." But I've been in crypto since 2009. Spent a lot of time in the Bay Area doing financial tech companies. Was the 10th employee at Blend Labs out of San Francisco, which did mortgage technology and IPO'd 2 years ago. And then I moved to New York City in 2016 to get into, I'm not going to call it crypto, it was using blockchain as a technology to solve financial problems. And it resulted in us creating a private blockchain and then building out financial workflows for exchanges like the Australian Securities Exchange, clearing houses like the DTCC, Fannie Mae, and a number of other projects.
You built the technologies for all of those companies? Cool.
Proof of concepts.
Yep.
None of them. The Australian Securities Exchange is the farthest along of adopting it and putting it, replacing traditional database software with blockchains as a system of truth. But everybody wanted to learn what could happen. Now, very simply, I kind of feel like I made like a cookie cutter process and just kept showing it to other companies. But essentially, when you have a financial workflow where different counterparties, it could be two traders and an exchange, or different entities, it could be within a bank, they've got subledgers in different countries. The data synchronization between different legal entities or sub-entities of the same company the reconciliation cost from a data perspective is immense. Trading, there's people on the phone. 50% of the back office cost are people on calls with other traders saying, I got 55 million in Apple coming to me, but you say 51 million. Let's figure out where the error in the trade is, and they're working through that. Putting it all on a ledger that gets synchronized out is a technology that kind of like, it was the new technology in the room that everybody could adopt at the same time, right? And it resolved a lot of these issues. But that being said, I'm a believer in the underlying technology, not necessarily, I'm looking around and I see a lot of companies here at this conference that are NFTs and hype and all these things that might not be around in a couple of years, but blockchain is what I believe in. So what I'm working on right now is, and we've been at this for 3 years, my business partner and I, a way to do a crypto exchange where you don't deposit your asset. And for the longest time, people are saying, oh, okay, well, no one's going to do it. You can just put it into Coinbase. You could put it into FTX. But we know what happened last month, right? Depositor funds were being essentially stolen, repurposed, for very risky loans that didn't pan out and ended up being losses on the books. Now everyone's saying, oh, you guys might be onto something.
Explain to me how that works, because as soon as you say something like that, hey, you can deposit it, but you still own it?
Still, well,
it stays.
You still own it.
It hasn't transferred from your wallet.
Right. So let me give you the example. And it took me a long time, as a technology guy, it took me a long time to understand how money actually works, right? Because we grow up, right? Your grandma gives you $10. She says, go put it in a bank account. And you say, okay. Grandma takes you down, opens a bank account, and you get a ledger. It says $10 is deposited in. But what grandma never told you is that you gave that money to the bank, and the bank gave you an IOU back. It's not your money anymore, right? And if the bank fails, you lose your money, except for we have FDIC insurance now, so now the government will pay you back up to a certain threshold. Crypto exchanges are the same.
So I'm lending my money to an institution.
You're giving your money.
I'm giving my money.
You're giving your money. And you're trusting that their reputation and laws, we have laws about giving money back, but we've all seen videos from 100 years ago, like 1920s, when there were bank runs, right? When there was maybe $1 million in a local bank, right? And there were like $5 million worth of deposits, and the bank mismanaged funds.
Sure.
And people are banging on the door because they know that 1 in 5 people are going to get their money back, right? It's crazy. Crypto works the same way, right? Crypto, I'm thinking back to the Bitcoin white paper from 14 years ago, peer-to-peer wireless transfer of value. It's unilateral. I can send you Bitcoin, right? But when we wanted to trade assets, let's say you have Bitcoin, I have ETH, a bilateral trade, there was no technology to do it at the time, so they said, wait, well, what do we have in the financial tool chest? Oh, centralized depository institutions. So Mt. Gox, and eventually, let's use Coinbase, because everyone knows Coinbase here in America. It's essentially a business, no different than a bank, right? They take deposits, but the fundamental tenets of money are the same. You're giving it to them, right? You